You're also overweight China. Does that mean that you have greater expectations for economic performance out of China next year as the performance in the U.S. sort of fades?
Yeah, I would say that China is more of a tactical overweight for us, where given the underperformance and the fact that the market is pretty much scraping the bottom of its trading range in the last 12 months or so, and the fact that going into next year, we do expect that China growth will be slightly better in the first half and slow down a little bit more in the second half. So given that trajectory, we do think that China is prime for a tactical bounce here, given also the fact that many of these policy stimulus measures have been coming through. A lot of investors are now watching the CEWC, and if we get a confirmation of growth targets at about 5% and more policy moves towards addressing some of these long-term challenges, that's what we think will drive China upside. We see that more as an upside optionality rather than something very structural, because that will likely take more time to play out. The big problem in China obviously has been the lack of confidence, particularly both from businesses and from consumers. And we think that this is something that recovers slowly over time. But if you start to see policy moves from the government to try and jumpstart the economy, that gives positive optionality.
Is the confidence going to come out of the economic numbers? Because there's also a lack of confidence, it seems, right now about regulatory crackdowns that have happened in the country. We're now seeing the President Xi Jinping is delaying that key economic plenum, the third plenum at its meeting this week. We had the official readout. So it seems that there is still a lot of speculation about where policymakers are going from here. So if you're expecting that confidence to come where investors can actually get into Chinese assets, will that mostly have to rely on a rebound in economic growth?
Yeah, there's three ways that confidence comes back. You either have very large policy support coming through, right? That doesn't seem to be on anyone's cards. There doesn't seem to be any appetite for that. The second way is regulatory certainty, because this has been the key sticking point over the last 2 years, where a lot of businesses feel that they don't have sufficient regulatory visibility to invest and hire people. And as a result, we've seen the job market has been slightly lackluster, and that bleeds through into consumer confidence, because consumers don't have visibility into their own incomes. And that has been a big drawback for the Chinese economy. The third thing that can jumpstart or build better confidence is simply time. With more time, if the economy continues to do okay and remain stable and not crash, you will start to see people getting back into their daily routines, and that will start to build confidence slowly. But that's a very slow process.
The tech sector, you mentioned how you're not necessarily liking that in Asia, but I wonder why, because we have continued to see signs that perhaps a semiconductor slump has bottomed out.
Yeah, that's been our most controversial call, the caution towards the tech space and the tech-heavy markets in general. And that stems from a variety of reasons, right? Firstly, if you look at the cycle bottoming, and that's been happening, and the markets have been pricing that in. If you look at moves really since January, we've started to see the market discount an upcoming turn in the semiconductor cycle, in the memory cycle, and that's been already driving markets to a certain extent. So if you look at valuations where they stand relative to where we are in the cycle bottoming process, it looks a little bit rich to us. The second thing is about AI, where we are, speaking with investors, we get the feeling that people are starting to take a little bit money off the table on the AI trade. And this is largely driven by the fact that there hasn't been very significant application follow through in the last 1 year since we had ChatGPT come online. So that's proving some downside pressure on tech valuations overall. The third thing is on positioning, where if you look at Korea and Taiwan as markets, investors are generally neutral to underweight, but within that, investors are heavily overweight the tech space. So it leaves very little room for the sector and these markets to do well. So the risk reward from our perspective is slightly skewed to the downside.